Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Wednesday, September the 28th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in this live session to take a look at the market, macro to micro, take a look at the structure of the market, drill down to our trade levels, our targets, and our hypotheses. We create multiple hypotheses each day so that no matter what the market throws at us, we have a plan of action in place and we'll recognize what to do rather than trying to do it in real time. This is a subscription room, so if you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. This is a group of retail traders operating within a self-organized learning environment. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so yesterday, our main hypothesis was a open auction in range. We moved out of range, or just slightly out of range, just before we opened. And then we were looking for a rotation up, and then finding sellers and rolling over and coming down towards the 28, 29 area. Hypo 2 was an open auction out of range, a move down, a failure to break out, or a false breakout, and then a rotation up through to the 52. And that's essentially what we got thrown at us. We did not get the late day probe to bring Hypo 4 into play. Hypo 4 would have been having us expand the trend day higher up into the 58 to 60, 50 area. Very multi-dimensional profile, but basically all the fun happened in the first half of the day, and then the second half of the day there was just nothing. It was just brutally sideways, and basically there was no edge there to create a trade. So hopefully you got in early and you made your money, and unlike me, where I just sat and watched the market, and you went and did something else. Taking a look at the news, we do have a lot of news today. We just had core durable goods came out basically as anticipated. This day's got a lot of people speaking and a lot of news in the RTH session. You can see that the overnight session was very choppy. We've tested both sides. Inventory is somewhat neutral. Very two-sided trading overnight. The bulls and the bears could not stay in control in either direction. 10 o'clock, we've got Fed Yellen speaking. 10:10, we have Bullard speaking. 10:30, we have Draghi speaking. And then, of course, we've got crude oil inventories. And then later this evening, we've got George speaking. Boy, these people like to talk a lot. They don't do much, but they like to talk a lot. So I'm expecting the market to be fairly choppy and rotational during the course of at least the morning, and then maybe picking a direction and taking off in the afternoon. Taking a look at the overnight session, you can see that it was very choppy. They took it down, and then they took it up, and then they took it back down, and then they take it up. So there's no real any control in either direction right now. We're very balanced. We were creating a ascending, broadening wedge. We've fallen out of that. So I'm looking for possibility of a little bit of a continuation down, but we have conflicting story with the fact that we've got this this zipper setting up here, and the zipper gives us a measured move up into the 57.75 for primary and 60 and the extended. We were looking for extension last night with the fact that we closed near the highs on a trend day. We were looking for that extension up into the 58 to 60 area. We got to 58 and that was it. And Europe sold it off. But let's just take one step back because I like to always start my day with just starting with the macro to micro. I start with the monthly. I'm using a 9 EMA, a 20 SMA. I'm looking for slope and separation. I know you guys probably get tired of hearing the same thing over and over again, but it's the same routine I do every day. So I'm looking for strength of the trend, where the trend is being violated, and where we are within the trend in all the different time frames as I work my way from the monthly down into the intraday. Beautiful trend up, challenge at the end of 15, beginning of 16, and then they've taken it back. And we've got slope and separation to the upside. The trend is a continuation pattern on the monthly. On the weekly, we had this long run, only the third time in 20 years. We've had 8 consecutive weeks that were bullish, and then came back down and tested the 9, took it all, tested the 20, took it all back, most of it, and then we've launched from there, and now we're above the 9 and the 20 on the weekly, so we're getting continuation pattern on the weekly to the upside. On the daily pattern, we're basically, we had started this downward trend, and then we've taken it back, come back down and tested it, and we're back above. We're basically in consolidation on the daily. On the intraday, as we move down, there is a possible cup and handle, inverted cup and handle here. And just to take a quick look at it, there's your neckline or rim line, whatever you want to call it. Look at the retracement. So we're basically, just possibly violating it if we got a little bit higher. I wouldn't say that this is violated because I'm not taking it from the extreme. I'm making a measured, more conservative measured move. And then if I take a look at the current extension, it shows that the primary target down here is down at that 21.18 and a quarter. Anybody remember what that 21.18 area is? That is the return and the next big target below. So just keep an eye on this. If it breaks below the 33 and a quarter, then you've got a pretty decent looking measured move to guide your direction. But consolidation right now on the 4 hour. Going to the 1 hour, you can see that we're trying to hold the 9 right now. Just basically stair stepping up, and but the overall trend is still up on the 1 hour. On the 30-minute, same thing. But again, we're being challenged. There's a couple naked crosses on the 30-minute, the 15-minute, and the 5-minute. We've got one right here at the 44.75 on the 30-minute. On the 15-minute, there's one down here at 42 and a quarter, 42.50. You can see that the 15-minute, we are trying to get below the 9 and the 20 right now and get a possible continuation down. And then on the 5-minute, you can see we've broken and we are below the 9 and the 20. There is a naked cross on the 5-minute here at 21.50.75. So just keep an eye out. There is some targets to the downside, but we have conflicting information based on the overnight action and the fact that we've got a possible zipper measured move. And this zipper measured move still allows for fluctuation, does not get violated until we get below the 21.48. So we could go down and take out that naked cross on the 5-minute and then bounce right back up again. But this measured move gives us a target up here at the 57.50. I'd be looking for a takeout of the overnight high at 58 and then continuation up into that CHVN area up at 60.50 area. All right, so taking a look at the big picture. Okay, so we are inside of this black microcomposite VPOC where value remains above up in the 72, 75. We have broken out of the balance up here, come down, created a value area from 38.75 down to 16.75. We broke out, we gapped up, we were failed to hold up, the gap up. We've come down into the into testing the value area, and the 2-day microcomposite VPOC is sitting right just above the value area high. So the last most accepted price right now is down here in the 21.39, 21.40 area. We've gotten above the key line in the sand at 44.50. That is going to remain the key line in the sand. Now it's below us, and we're chopping around in this distribution in between the 52 and the 54. Remember that the smaller I'm just going to take this off so you can see this clearer. The balance area that we first came in and created the microcomposite VPOC is the 21.54.50, and we seem to be chopping back and forth. If we can get above I gotta do this, sorry, whoops. If we can get above the 60.75, that puts us inside of this upper microcomposite value area, and at that point in time, then I'd be looking for some continuation up to test the 66. 66 is going to be our key line in the sand above, and if we can get above 66, then I'm looking for us to come back into the overall microcomposite VPOC, which is up here still at the 72.75. Below 44, look for them to come down and test again to the 40.50. I doubt that the third time down here is going to hold, and I'd be looking for a bigger move down like we were looking for yesterday, down here into the 28, 29, 27 area and back right inside of balance and back to the microcomposite VPOC, and possibly come down and test the lower side of that value and that next big target below, which is down here at the 21.18 and the measured move of the inverted cup and handle. So taking a look at the Globex session, you can see that we have triple distribution, basically. You can call it a quad distribution as well, but we are finding a fair amount of balance in around the 53, 52 area. Our overnight VPOC is 52.75, basically right where we're trading right now. We have our overnight low down at 47. We have a 10-handle move in the Globex session. Our overnight high is 58. And based on our 20-period daily is running at 23.80, so 21.47 plus the 23.80 takes us up to 21.70.75 for upside daily ATR target. Whoops, didn't mean, yeah. 21.70.75, and then our downside is is 21.34 1/4. All right, we got an LVN here at 54.50, which is basically the range high from the prior RTH session. Got an LVN here at 50.25. That's just above this 49. I'm going to use the 48.75. And I'm going to use the 40. That's all the information that the overnight session gives us, so we can get rid of that. And now I'm going to take a look at this. Our key line in the sand, of course, is going to be the 44.50, but I'm going to adjust it down to the 43. Not because of the fact that it's a value area low, because it was a trend day yesterday. So basically, there wasn't a lot of value created, but it's the midpoint from yesterday as well. So I'm going to use the 53, and basically it's going to be a slush zone between 43, I should say, 43 and 44.50. All right, and then targeting below the 44.50, I'm targeting the 40.50, of course. And then we have the 38.75, which I'm going to move down to 37.50. The FOMC, the downside daily ATR target, don't need the opening swing, and then the range low at 32, and then everything becomes targeted towards the 28.75 and 27.50. And we're at 22, and then the 18.25 down there. And then the key support still is 21.07. To the upside, 66 key line in the sand. Targeting, the main target above is this 58.50, 58.75, and the overnight high. Then 60. 59, and then targeting 60.75, and this can get removed, 66, 68, and then the next big target is up here in the 70 and 72 area. So those are the trade levels that I'm looking at and the targets. What's my main hypothesis? My main hypothesis is got to go with the zipper and the measured move. So my main hypothesis is an open auction just out of range or just in range. We're basically testing the range high right now. So we're probably going to open up outside of range, but I'm either looking for an open auction just out of range or just an open auction just in range. And then I'm looking for chop on the open, a move down into the 52, maybe even as low as the 48, 49 area. Then I'm looking for initiative buyers to step in and rotate us up into the 58.50, chop around here with maybe a late day probe to test the other side of that balance up at the 66. So hypo 1 is open auction just out of range or just in range. Basically, large rotation on the open, a move down to the 52, maybe down to the 48, 49 area, initiative buyers stepping in, rotating us up into the 58 area, 60 area, chop around here with maybe a late day probe up into the other side of the balance and the key line of the sand at 66. Hypo 2 is an open auction just out of range, or an open test drive, or an open auction just in range. It's still early to know whether or not we're going to open above or below 54, but a move up into the 58 area, 59, and then find responsive sellers and rotate us back down towards 52, push through into the 48, chop around in the 48 area, and push through and close somewhere down here between the 43 and maybe even a late day probe down into the 40. So I'm expecting a rotational day in either one of the hypo 1 or hypo 2 scenarios. Hypo 3 is going to be an open test drive or an open drive, a push up into the 58, chop here, push through to the 66, chop, and then get a push up into the 70 to 72 area and close up here as a possible, depending on how high we get, possible gap and go day or just a continuation day of the trend that we turn around Tuesday that we had. And then hypo 4 is open auction just out of range or in range, and then a push down, chop around in this distribution zone, get continuation, push through down into the 36 to 32 area, chop, and then get a push through and a move down into the 28 to 27, maybe a late day probe down to 18. So those are my 4 hypos. That's what I'm looking at to trade. And as always, that's going to complete our pre-market session. Trade well, trade safe, and we will catch you on the flip side.